After this video, you are going to be able to trade any chart like a professional. In this video, I am going to review a strategy so simple that has turned mere hundreds into thousands of dollars. A method so powerful you'll be using it to trade the Nasdaq, US30 and gold by tomorrow morning when the market opens. But before we do all of that good stuff, if you're new to the channel, welcome. We trade the Nasdaq over here. If you're returning, welcome back. You already know what's up. Don't forget to hit the like button, turn your post notifications and subscribe to the channel. Now, if you are able to pay attention to everything I'm going to say, you are going to be able to replicate this strategy on your charts as soon as the market opens tomorrow, and you will be trading just like a professional trader. This week is a golden opportunity. We do not have any high impact news. No high impact news means maximum profit potential. We're going to obliterate the market. The first thing you're going to do when you open any chart is top-down analysis. That is step one. We will first use the horizontal rays to pinpoint where price is heading. Now remember, higher time frames dictate the trend, whilst lower time frames are just for the noisy traders, and we'll leave those behind when we are starting our analysis. Now, how does that look on the chart? Right over here, you can see we're shifting from the 30-minute time frame to the daily time frame, right? And then on the daily time frame, we want to notice where price currently is. We are sitting at 18,370 right over here. We're going to pull up our horizontal ray. You can see one of my favorite tools right over here. I'm going to drag that out so that I can see what price is doing at that zone, right? So you see the current price is right over here. It shows me what was happening in the past right over here, and I can see that the price is sitting at a very important zone in the market. Next, we want to identify the trend. Trend lines are our guide. We want to see if the price is rejecting at these trend lines or the price is breaking out of them. We want to even see if the price is close to any of an important trend line. On our Nasdaq right over here, you can see that on the daily time frame, we can draw a most recent trend line from this zone to this zone. Now, what did I say? Is the market respecting this trend line? In the previous instances, it respected it right over here, it respected it right over here, it respected it here, and at this zone, is the price respecting the same trend line? We can clearly see that the price has broken out of this trend line. And for a fact, we already know that the market is going to open with this candlestick closed outside of this trend line. It has absolutely disrespected our trend line on the daily time frame. That is an important thing to keep in mind. What do we have on our Nasdaq? What are we even looking at? We're looking at a horizontal ray. The price is sitting right at that horizontal ray, and we're also looking at the price breaking and closing outside of an important trend line on the daily time frame. Now, how are you as a good trader going to interpret this information? Whenever price breaks out of any support or a resistance or a trend line level, you always want to wait for a retest. In any case, you should be able to tackle the market and do situational analysis, understanding what the current price is doing and not being biased to what you already have in your mind and what you want the market to do. Then the next step is to refine our horizontal rays, right? So over here on our chart, you can see that we have indeed this horizontal ray right over here. Now, if you know what a candlestick is, it has a body and a wick, and most times the price likes to wick as a fake out and then moves in the direction of where it actually wants to go. Now, if you look at this chart right over here, you can see that at this zone, right, where the market is, there is this little wick right over here. We should not forget that, right? So in as much as we would like to look at the price right over here where it is, this little zone that we just created, including this wick right over here, should be respected. This is what is called refining your entries, right? So you want to consider each and every potential point that the market might go to reject off of, or that the market might go to break out of. All of these things cannot be done on the daily time frame if you are a day trader. Now, we're day traders, we always want to go onto an even lower time frame to refine our entries first. So I'm just going to go onto my 4-hour time frame right over here, just to look at what is happening in the market. And when I am at this zone, I can already see that I can draw another trend line. This is what is called a trend within the main trend, right? So I'm going to draw this trend right over here, this trend line right over here. This is just a rough sketch of the trend line. We have a week to a week right over here, and we pull it down to this zone. Now notice, if you come to this level right over here, right, there is nothing that is holding this market from going up to the top. The only thing that will hold this market is this trend line. In as much as this trend line is the one that is retesting, it is very obvious to a lot of traders that they will be eyeing this trend line. So the market has a potential of breaking out of this trend line, going to this trend line, and rejecting off of this trend line before it actually just pushes back down. So in this case, it's just a patience game. Money will be transferred from the impatient traders straight through to the patient traders. When I am trading, I always want to look for potential entry points during the New York session, because this is when the US market has a lot of volatility, right? So whatever is happening throughout the day, I am going to ignore. Only when we get to the US session, the New York Stock Exchange market opening, that is when I want to look for potential entry points, because I'm going to get into the market and right out of the market without wasting too much time, right? As a day trader, you should understand that you are not in there to hold the trades for over hours. I want to aim to get into the trade and out of a trade within an hour at most. So to simplify this weekly analysis, let us go back onto our daily time frame. This is exactly what we are looking at. We are sitting at a zone where the market broke out of. These were previous highs. The market broke out of it. It's coming back to this level. There is a potential of a break and a retest, right? In as much as it broke out of this trend line, there's also a potential of a break at the zone and a retest. Now you are battling between a break of the highs and a retest, a potential buy to the top, and a potential break out of the overall trend and a potential reversal of the trend, right? We can start going into a downtrend right over here, but all of these things cannot just start happening. These zones right over here should be considered, right? So you're saying, so for you to really get good selling entries, you don't want to sell off of the breakouts of these zones, as these can be potential bank zones that the market can come and bounce off of and then push up back to the top. You want to look for selling positions when the market comes to retest the overall trend line that it broke, right? To show that the selling momentum is coming in. That's when you want to sell off of, right? Or if it's coming to respect this trend line right over here. If it's going and bouncing off this trend line before it breaks out of it, everything else is possible. But then obviously it's never going to be a trend line like that, right? It's going to be something like this. So you want to say the price coming to this zone, and then if it breaks out, and then if it's rejects at this zone with good price action, then you're going to absolutely just sell it. But so long it's in this zone, you can even capitalize from this level. If it gives you good price action right over here, this can be a really risky entry with your stop loss right below here, because if it now breaks out of this zone, you don't have any reason holding any buying positions at the zone. You want to just, close it, because there is a chance that it can even keep going lower, right? So if you're going in for a buy right at the rejection right over here, right, you're going to write it down back to the top at the zone, and at the zone you have to wait to see confirmation. If selling pressure steps in, this is when you're exiting your buying positions if you enter from around about the zone as the breakout of the zone and a retest, right? Because here you already know that the market wants to retest after it has broken out of that zone. Now, if you just mastered this way of trading, you're going to see a tremendous improvement in your trading result. Now, are you ready to dominate the market? If you're not in my free group, check down in the description below. The link is right there. From me, you can learn from my setups, you can learn from my signals, and you can also copy my trade by just clicking the links right in the description below. And if you did enjoy that video, don't forget to hit the like button, turn your post notifications, and subscribe to the channel. You feel me? With that, it's been Tino, and I'll see you in the next lit video. Peace.